The number of people applying for mortgages increased for the second week in a row, even though mortgage rates got as high as 7.47% last week. Total active listings in the U.S. increased by 9,312 homes. This is good news for home buyers. The Fed had a meeting last Wednesday where Powell gave some new, very valuable insight as to the amount of improvement in inflation the Fed would want to see before pausing or lowering these current rate hikes. He gave specific numbers as well as timelines, which we'll cover here in a minute. But what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as national news. We're looking for trends, which cities and zip codes are the hottest if you may be looking to sell your property for top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, it's my favorite part. It's the top 10 ranked charts of both hottest and coolest cities and zip codes in Dallas and Collin counties. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is September 25th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. First up is market news. The FOMC paused rate hikes for the second time this year. However, there is still a possibility of one more rate hike in November. But this doesn't mean you can or should wait until November to see what happens next with rates, because the bond market, which is really the decider of where mortgage rates are, is going to be moving long before the next meeting. If the economy looks like it's heating up between now and the next November meeting, you can bet mortgage rates will already have risen long before that meeting takes place. So again, if you're waiting to hear what the Fed says, you're already too late. The move will have already happened. Something very interesting is that Powell shared the committee's economic predictions in the following quote. He said the median unemployment rate projection in the summary economic projections rises from 3.8% at the end of this year to 4.1% over the next 2 years. Meanwhile, the median projection for total PCE inflation is 3.3% this year, 2.5% next year, and to reach 2% in 2026. So if he's not expecting us to reach 2% inflation until 2026, then it sounds like he's expecting rates to stay higher for a long time. And it's also very helpful for us to hear that their expectation is to get to 4.1% unemployment in the next 2 years. We've always been watching unemployment as an indicator of the strength of the economy, but this is the first time I've heard him suggest an actual target number of 4.1% and a timeline of the next 2 years. In other words, these projections give us valuable insight into the amount of improvement regarding inflation that the Fed would want to see before pausing or lowering these rate hikes. And this will also help us if it looks like we're getting to that 4.1% unemployment faster than 2 years. We'll know the Fed is tracking ahead of schedule and maybe wanting to lower rates sooner. Now, having said that, unemployment actually seems to be headed in the wrong direction. As you can see on this chart, initial jobless claims took a huge dip, this line going straight down. If you're wanting rates to come down, you need this number to be going up, so the unemployment will be going up. So this is a good news for Americans overall, but a bad news for those of you wanting to buy homes, because this is suggesting that unemployment is actually coming down when the Fed wants it to get up above 4%. Okay, moving on, we're taking a look at inventory, and again, this is national data. You can see each one of these black dots represents 1 year, so you can see we are still at less inventory than we were a year ago. More importantly, I want you to see there are only a few more potential weeks for inventory to increase before we expect it to start declining. And this depends on the year you look at. So if you looked at 2021, we should already be starting the decline. Same with 2020. Same with 2019. However, 2018, it went a little flat, maybe a little up, but every other year, basically from here on down, we would start the decline. So we don't know yet when our seasonal decline is going to start, but it's somewhere between now and whenever this little bump up was. So just know we're very close to our seasonal inventory peak, and then we're going to start declining. Now we're looking at the new listings data. As expected, we had a drop from last week, and it's a nice orderly decline so far. Just remember, there will be some weeks, as you see here, where new listings actually goes up, but overall, we're looking for a nice steady trend down to the end of the year. So what all of that means is you can expect less new homes to be listing every week, which means less overall homes to choose from. Inventory may go up for a few more weeks, but again, that's homes that are already sitting on the market. That's not new homes. So from here to the end of the year, you're going to have less and less new options to choose from. That doesn't mean there won't be great homes coming on the market, but what it does mean is that you need to be already working with an agent, already pre-approved, ready to go when they do, because as we said, there's going to be less and less of them to choose from. So as soon as they come out, you need to be ready to go and get it. One other metric I wanted to take a little further look at this week is the properties having price decreases. This is the number of homes having price decreases. So you can see this week we're up to 44.1%, but I wanted to point out that that's still less homes than last year having price decreases, which this week last year was at 46.32%. Now, the previous 2 years, 2020 and 2021, as you'll remember, everything was multiple offers all the time. Even those were up at 35-36% this time of the year. And then if we go back to 2019, a more normal market, we were at 45.15. So even in 2019, more homes were having price decreases than we are now. So if you're one of the people who thinks we're going to have this big market crash, it's not being reflected in the data. And I just want you to know that, because some of you might look at this and go, wow, 44%, that's so many homes. It's a totally normal number. And then looking at Collin County, very similar story. They're at 50.59, but this time last year they were at 52.57. If we cut out these two big anomaly years, they're at 51.96. So as far as the number of homes having price decreases, we're in a totally normal range. Okay, let's move on to mortgage rates. Okay, we started last week at a 7.29. We shot all the way up to 7.47 on Thursday, had a little bit of relief at 7.37 on Friday, although I have to bring you some bad news. If we look here at the 10-year Treasury, it looks like when we get the number for today, it's going to be quite a bit higher even than that 7.47. So this little white candle here, this is what got us to 7.47. This black candle here, that was our relief on Friday, and we started this week above both of them. Now that doesn't necessarily mean we're going to be over the 7.47 automatically, because if the spreads of the 2 and the 10-year get tighter, then this will have a lesser impact on mortgage rates than before. For example, just to clarify, remember these candles right here, these were 7.49%. Now you'll see we went even higher than that and only got to 7.4%. That's because the spreads got tighter. So it doesn't necessarily mean we have to go over, but I think we probably will, at least by a little, especially since it's only been 2 days since this last high. But just know it definitely looks like we're going to break above 7.5% rates, but we won't know that officially until later today. And this makes for 20 consecutive weeks around or above 7% rates. That's 5 months. Now, regarding mortgage purchase applications, the good news is we saw a 2% increase in the number of people applying for mortgages this week. If you'll remember last week, we saw a 1% increase. So even though neither of those are a big increase, that's 2 consecutive weeks of more people applying for mortgages, even with rates as high as 7.47%. In total, this makes for 17 positive, 18 negative, and 1 neutral print for the year. And seeing an increase in the number of people applying for mortgages in this high rate environment tells me that buyers are starting to understand they just don't have an option. Rates are not looking like they're going to drop anytime soon. They know if they continue to wait, they could be dealing with an 8% rate in a few weeks from now. And they know that the mortgage rate is temporary. So whenever rates finally do drop, they're going to get to refinance down. But it doesn't look like in the near future rates are going to get any better. Now, I want to take a minute to remind you, many home builders are still offering crazy low rates. I saw this week one builder is offering 3.99% for the first year and 4.99% for the remainder of the loan after the first year. What that looks like on a $400,000 home is that first year, your monthly payment would be about $600 a month lower than if you were to get like a 7.3% mortgage rate. So you'd be saving $3,600 a year just because the builder is offering to buy down the rate. And if you'd like to learn more about new construction in general, make sure to watch this video. Okay, I want to quickly run through the MLS data of what happened in the last week. Starting with Dallas County, we had 256 closed sales in the last week. That's 2 more than the previous week. 257 homes went under contract. That's 31 less than the previous week. 510 homes were listed in the last 7 days. That's 36 more than last week. 61 of the homes that closed were immediate sales, meaning they contracted within the first week. And in total, there are 2,164 homes in Dallas County that are either under contract or pending. That's 9 more than last week. Looking at Collin County, we had 232 closed sales. That's 35 more than the previous week. 127 homes went under contract. That's 31 less than the previous week. We had 348 new listings. That's 81 more than the previous week. And 47 of the homes that sold were immediate sales. That's 6 less than last week. In total, 1,685 homes are either under contract or pending in Collin County, and that's 82 less than the previous week. So in general, we had more closings, we had more listings with a small drop in the number of executed contracts. Okay, very quickly, let's look at the housing data starting with Dallas County. Okay, if you've ever seen my videos, you know that what I look at is the market action index. It just takes all of this data, puts it into one easy to read graphic and a number to tell us we're in a strong seller's market. And the way to read this graphic is anything below a 30 is a buyer's market, anything above a 30 is a seller's market. As you can see, ever since rates started shooting up, it's been a slow, steady decline every single week in the market action index. Though this week we did not see a drop in median list price, it was flat from last week. The median days on market is finally starting to tick up again. The average has been holding pretty steady around 68. As we discussed earlier, number of homes having price decreases, 44%, but that's a totally normal number this time of year. Inventory just slowly, steadily climbing, but definitely not at a rate that is very helpful to us. So we don't spend much time on this every week because it's really just been a slow and steady cooling as rates continue to increase. Moving on to Collin County, prices, median list prices back to where it was about 2-3 weeks ago. We saw one spike up last week. It came right back down. Median days on market is about where Dallas is at 42. The average though holding steady. Number of homes having price decreases, totally normal as well for Collin County. And their inventory has been flat for months. So that's definitely worse than, at least in Dallas County, it's climbing even though very slowly. And again, their market action index looks the exact same, although theirs does look to have been flattening out a bit more. It's still declining, but at a much slower rate at this point, it looks like. But either way, both Dallas and Collin County are still strong sellers markets around a 46. Okay, now using that same market action index, we're going to use that number and move on to my favorite part of the video, the top 10 ranked charts of both hottest and coolest cities and zip codes in all of Dallas and Collin County. Starting with the top 10 hottest cities list, Carrollton and Louisville remain the number 2 hottest cities. Richardson heats up 1, Coppell cools off 1, Garland heats up 2, Grapevine heats up 2, Grand Prairie cools off 2, Irving heats up 1, Lancaster jumps on at number 9, it was not on the list last week, and Mesquite remains the number 10 spot. So what happened is Balch Springs actually gets knocked from number 6 entirely off the hottest list. And I believe it was something like a 57 last week, and it's all the way down to like a 52 this week. So a huge drop for Balch Springs. It's no longer on the hottest cities list. Now we like to zoom in and look at specific zip codes. The absolute hottest zip code is 75041 in Garland, followed by Carrollton 75006, Louisville 75067, Irving 75060, Richardson 75081, Carrollton 75010, Carrollton 75007, Irving 75061, Garland 75040, and Mesquite 75150. So those are the top 10 hottest cities and zip codes. Now we're going to do the exact same thing looking at the coolest. The absolute coolest city, the only one that remains in a buyer's market, this is Leonard, Texas. Leonard, Whitewright, and Sunnyvale remain in their same positions as last week as the 3 coolest cities. Salina cools off 3 spots. Ferris heats up 1, Blue Ridge heats up 1, Van Alstyne heats up 1, Rockwall remains, Red Oak jumps onto the list at number 9, and Anna heats up 1 spot. So Royce City heated up. Last week it was number 10 on the coolest list. It heated up and left the list this week. Looking at the coolest zip codes, Leonard 75452 is the absolute coolest, followed by Whitewright 75491, Sunnyvale 75182, Dallas 75203, Dallas 75219, Salina 75009, Rockwall 75032, Ferris 75125, Blue Ridge 75424, and Dallas 75208. So that's it for your weekly update. As always, if you're looking to buy or sell in the Dallas area, just call, text, or shoot me an email. I'd love to connect. All that info is in the description below. Thank you for watching. I'll see you in the next video.